the key thing with the property market, what the main talking points, I suppose, is what really moves the property prices. Okay, what are the key factors that actually move the property prices? Now, the very first factor I've got here is, this is my top 7. Of course, there could be another 10 factors that have an impact on the property market, but these are my top 7 in some sort of an order. So supply versus demand is probably the most important factor when it comes to property prices. Okay, and just like any other commodity out there, it's economics 101. If supply is high and demand is low, you won't see price growth. If demand is high and supply is low, you are going to see price growth. And that's with every single type of commodity. You saw it during COVID with cars. Cars were not coming in the country, and secondhand car prices went up quite significantly. So it applies to all commodities. Second one there is interest rates and affordability. Now, I've been using this slide for the last 4 or 5 years when inflation wasn't an issue. Now, inflation, this number 2 point of mine, inflation has become a big issue. Interest rate and affordability, sort of, we all know what happened in 2021. Affordability really shot through the roof because interest rates went down to, cash rates went down to a record 0.1%. Now, that wasn't sustainable and it's gone up now, and we'll talk more about interest rates in a minute. But we've always got to watch inflation, and we've always got to watch wages growth. And I'll talk more about that shortly. Third one there is the regulator. Our key regulator is APRA, but the talk at the moment is all about RBA because they are actually moving the cash rates. Okay, they've been moving the cash rates for the last 10, 12 months. So and APRA is the one that actually has a lot more levers to pull than the RBA. So they are the ones that can set bank lending policy, for example. So most of you probably are aware that if you go to the bank to borrow money today, and the bank says, listen, the variable rate at the moment, let's say the variable rate at the moment is 5.5. The bank will use a 3% buffer at the moment when they're working out your ability to pay your loan. So instead of 5.5, they're going to use 8.5. Okay. We will likely see that 3% buffer actually, can we please stay on mute? We will likely see that 3% buffer come down to perhaps 2.5% if APRA thinks the RBA are completely done and the next move in interest rate is down. When that happens, I will probably think that that would be a good time to actually bring the 3% down to 2.5%. Okay. So as rates rise and the buffer is 3%, it makes it more difficult to borrow, and that obviously has an impact on the affordability. So the opposite is happening to what we saw in 2021. But we'll talk more about what might happen going forward in a minute. The other factor is the economy. For property prices to grow, it is extremely important that these 2 key economic indicators stay in check. And one of them is GDP, which is economic growth. Okay, your gross domestic product, that always you want it to be positive. If it's in negative territory, that's a recession, and we don't want a recession. The second one there is unemployment. We are at 45-year lows at the moment with unemployment at 3.5%. It's almost like everybody in Australia is fully employed. Okay, these 2 factors we've got to keep in mind all the time. So 1, 2, 3, 4. The next one I don't need to talk about because you all know post-COVID, what happened was the government is starting to spend significant amounts of money on infrastructure and providing a lot of incentives. And there's a lot of government spending that is going on at the federal and the state level. That number 5 actually is keeping unemployment and GDP growth in check. It is a big factor that helped us bounce out of COVID quickly, okay, unlike some other countries. So the government has done all the right things in making sure we had JobKeeper, JobSeeker, and all of those things you know about already, that made sure that GDP did not suffer all that much, and that so many jobs have been created. So unemployment is a really good place. The 6th one there is really important, and nobody talks about it much, although there is a little bit in the media now, and that is the delinquencies. Now, let me just, for those of you who are not familiar with the word delinquencies and loan write-offs, I'll just explain that. So number 2 here, I said banks' lending policy and appetite. So Australian banks are a little bit unique in the world in that the big 4 banks who have about 85% of the market in Australia, the big 4 are very, very big banks. Their balance sheet, 50% of their balance sheet is actually in residential mortgages. So the bread and butter of Australian banks is really residential mortgages, which is unlike any other country in the world, okay? So if a bank has, say, $900 billion in balance sheet, 450 billion of that is actually residential mortgages, okay? And we do have banks that have $800-900 billion balance sheet, okay? Now, what is delinquency then? So if your residential mortgage is not paid for 1 month, if not paid for 2 months, then the bank calls you. You go on a watch list. Okay, 3 months you haven't paid your bank loan, then you go on to what the bank calls a worry list. They start worrying about whether they're going to be able to recover their money or not. Kindly stay on mute. Thank you. So are we going to see a lot of delinquencies where people have not paid their mortgages for 3 months, and then the bank comes and actually possesses your property, whether it's investment property or residential, and then they put it to auction to try to recover their loan amount? Whatever's left over from the loan amount, then they will actually give that money back to you. And that's why they have what's called loan to value ratios, LVRs. And so the lower the LVR from a bank's point of view, the more chances that they will not have a loan write-off, okay? But banks, as we know, have lent people 90% of valuation as well. For that, most of the time you have a what we call a loan mortgage insurance, LMI. But why is number 6 important? And why, when people talk about a crash, whenever people talk about a crash, the first thing that needs to come in your mind, right, when people talk about a 20% crash, 25, and you've heard this 2 years ago. First thing you've got to think about is, where is unemployment and where is GDP, okay? The next thing you've got to think about is, when the bank goes and does an auction on a property, are there going to be any buyers for that property? These things are very important. Now, I have seen a recession here back in the early 80s. I have seen high levels of delinquencies and what we call a mortgagee in possession sale. Banks possess your property and do what's called a mortgagee in possession auction. I'm sure most of you have not seen many of these at all, okay? And are you likely to see many of these? No. And I'll tell you why. Because in Australia, people pay their mortgages. People pay their mortgages. And when unemployment is at 3.5, so when I'm talking about the early 80s, I'm talking about unemployment being around 7.9, not 3.5. I'm talking about a recession, negative GDP growth. So even if you wanted to get a second job to pay your mortgage, you couldn't, because you couldn't get a job. Some people migrated to Australia and then went back home. There were no jobs around, okay? So our economic environment, what the point I'm making on this, the most important point I'm making on this is that our economic environment remains reasonably strong, okay? Very strong, actually, where unemployment is. Just GDP will suffer a little bit, but not much. So the chances of delinquencies and large write-offs by banks is going to be negligible, okay? The chances of it are negligible. So we probably will not see that. Are there going to be mortgage in possession sales? Of course, there are going to be some. Some people have overexposed themselves. They might have to sell something. But banks are, post-COVID, banks are also trying to do more workouts with their clients so that there aren't delinquencies, so that they don't get headlined about selling somebody's house. Last one is the global factors, and I've always had this except for COVID-19, of course, but these factors do come into play, and it's more the global factors that have actually caused inflation to spike as much as it has. Enough on that one. Hopefully I've made my point that in Australia, people may not pay their credit card, they may not pay their personal loans, They may not pay their, other types of loans, even car loans, but they do pay their mortgages, right? The delinquencies on in mortgages, and I've sat in a lot of risk committees in banks over my many years, and I can tell you, we do not talk about delinquencies of mortgages. So we're in a good place. And banks' lending policy, like I said, they've got a lot of appetite to lend. If banks stop lending in this space, then that's going to have a big impact on property prices. Banks have a huge, they make 2% margin roughly on mortgages, residential mortgages. And when you've got $450 billion of it in a bank, then you can do your sums and see what 2% comes to. Okay. So what's been happening in the property market recently? These numbers I haven't updated since 4th of April, but there's a trend appearing here, which I've been talking about for quite some time. Okay, it has just been deferred a little bit because interest rates were rising. But I have been bullish about apartments catching up. So have a look, Sydney. So apartments, okay. So 12-month percentage change, 6.4. Houses is down. Melbourne, houses are down, up 1.2. Brisbane, apartments 15.5 up. Houses are up as well. But apartments is the story, okay? Now we'll talk more about that. So during 2021, this is what happened. So in Sydney, if you look at that orange one, houses jumped up this is median, okay? So median, houses jumped up significantly, apartments did not. So what is this? This is a huge gap that has developed. That's a huge gap. Now we're going to talk more about that gap and why it needs to close. Before we do that, this is what's making headlines recently, okay? The negatives on the left and the positives on the right, negatives and positives as it relates to property market. So on the left here, we had these credit issues in banks. We had bank failures, okay? Silicon Valley Bank, as you all know, went down. Credit Suisse had liquidity issues. Their profits just came out, and they're only 50% of their profits from the year before, but still profitable. So these factors, why is it a negative and why is it a positive? It's a negative because it can be a systemic issue. If it's a systemic issue globally, as we saw in global financial crisis, then you could have major issues on the property. But it was contained in parts of the US regional banks and parts of UK banks that had this issue, okay? There's Deutsche, Credit Suisse, a couple of others, but it wasn't systemic. The reason why it is a positive is as a result of that, okay? One of the factors as a result of why the RBA paused. I'll show you in a minute the impact that something like this on top here can have on our markets and our interest rates in such a short time. I'll come to that shortly. But I'll let you read all of the negatives on the left. So interest rates have been going up. What next? US Fed is at 4.75 to 5. Canada has paused. US inflation. Actually, this is now becoming a positive. So US inflation is at 5. It was 9.1 in June 22. It's come down in 9 months. It has come down to 5. That is a massive fall. And our RBA will be taking note of that. Our inflation came out today at 7. Is it high? Of course, it is still high because the quarterly number, quarter ended December 22 was 7.8. We are down to 7 for first quarter. These figures only come out quarterly. We do get monthly numbers. So we'll talk a bit more about inflation shortly. And then this last one here can be a negative as well, because the recessionary fears, okay, can cause issues. On the right here, we've got stamp duty. The new government has come in New South Wales. So stamp duty is a positive. They've increased the threshold again to 800,000. So first home buyers can have zero stamp duty for purchases up to 800. Australia faces a rental crisis. We'll talk more about rental crisis. You all know about that. It is the worst rental crisis our country has ever seen. Our unemployment, as I said, is still very low. 3.5 is a low place to be. Migration. Well, migration is another big topic that you're going to hear more and more about. And those numbers that the cap was lifted, when the government came into power, but everybody's underestimating migration. Now the figures are 650,000 over 2 years. Is that figure going to be correct? There is even talk of 1 million people coming here in the next 2 years. So if they do, I'm not sure where they're going to sleep, but there is a huge shortage of housing already. And our GDP we need to keep watching our GDP number, okay? So negatives, positives, they balance out. Now, some other recent news headlines. So that one I've just talked about, Commonwealth Bank cuts fixed rate home loans. So in the last 2-3 weeks, you've heard a number of banks start to cut their fixed rate home loans. What did Commonwealth Bank's fixed rate home loans cut by? 40 basis points, minimum 40 basis points. That's 0.4% fixed rate came down to something like 5.3, 5.4. Not much talk about it, okay? Not much talk about it. But I am going to talk more about it because that is going to be the big factor that is going to move our prices up significantly in the second half of this year. Inflation, in my view, has peaked, and this is from the news today. Inflation for now, obviously peaked, but it's coming off now. But rates, where is rates? We'll talk more about rates shortly. And then property prices, we're starting to see in some of the suburbs in Sydney where the auctions are going well above reserve. There was a 3-bedroom apartment in DY. I'm not sure if any of you saw that, but last weekend it went 400,000 above reserve. The price they were expecting was 1.4 to 1.5. It actually sold for 1.9. So you'll see more headlines on these things, but these are some of the topical ones over the last few weeks. Okay, very quickly on this slide. So 2022, we started 2022 and we thought, okay, we put COVID behind us, lockdowns are behind us, everything looks rosy, start of 2022, about a year ago. And guess what? Then all of these things happened. I'm not going to go through all of them. This is just I'm just tabling this because you already know all of this, okay? All these things happened. And of course, 2022 turned out to be a terrible year in a lot of ways, with inflation surging, interest rates surging, all of those things happening, okay? So it's very hard to predict what will happen in a year. Now we're into 2023. This is history, but I'm just tabling that. Now we come to the interest rates. Everybody knows the cash rates now. Even our Prime Minister does, okay? He didn't know much about cash rates before he came into power. But everybody understands and knows cash rates now. And I'm glad, actually, because I've been watching this for 40 years. Now, the Australian cash rate history is here all the way to 1990. So we were at 17.5 here. I paid 17.5 more than that in mortgages when I first bought my property. But then you've seen this fall here, and then there's one increase here, then flat and fall, second increase here, third increase here, a prolonged one over a long period of time, fourth increase here, and of course the increase we're seeing at the moment, okay? Why am I showing you this graph? Very simple. I want to make the point that the average since 1990, that this is the cash rate, the average since 1990 is 5%. That's the average. Okay? So when I say to people that we're in a low interest rate environment, they look at my face in dismay, like they don't understand what this guy is talking about. Okay. Now, if you have a look at this sharp increase we've just noticed, and of course it's gone to 3.65 now. This is slightly older, 2 months ago. But where does the RBA and the government want the cash rate to be? We want it to be here. This is the line that I've drawn here. Okay, we want it to be between 2 and 3%. 2.5 is the nirvana. It's the best place to be with cash rate, 2.5%, where inflation is also around that, between 2 and 3, and interest rates are there. Are we very far up from that? No, we're not. We're not at 5 or 6 or 7. we are just above, we're just lurking around that 3.6, okay? That is not, will it take us very long to come from 3.6 down to 2.5 again, or below 3 again? No, it won't take us very long. Might only be 3 cuts and you're there, okay? So please keep this in mind. The only reason why we are talking about interest rates so much at the moment is that we've had this sharp increase in a short period of time. The only reason why it's a sharp increase is because we had to go down to 0.1 because of COVID. If it wasn't for COVID, we would never have gone to 0.1 and we would have been somewhere here and the graph would have just looked like that, okay? Would have just done that. But this sharp increase, because there's 10 increases, the media makes a big story out of it. And of course it is costing us. So people who are paying 2.5% variable rate are now paying 5.5. It's more than doubled. Is it hurting our hip pocket? Of course it is. No question about it. So that's why we are talking about it a lot. But I want you to take home today the fact that we are not too far away from where the Reserve Bank wants to be between 2 and 3%. And we've only had 5 increases during that period. So just bookmark that for a minute. Now, CPI, I've just talked about, we peaked at 7.8. That graph has not been updated. And now we are down to we're down to 7. What am I showing? CPI, sorry, the CPI was at 7.8 and it was down to 7. Excuse me. Wages growth is something else we've got to keep an eye on. Okay. Now, the thing with wages growth is we don't want wages to grow too quickly. Have we got a lot of wage pressure at the moment? No, we don't. Is wages going to be looked after by the migration? Absolutely. And the RBA takes account of that. Okay. So interest rates, and where do we go from here? RBA paused last month. This month. What next? Now that the inflation number is out, well, any further tightening, in my personal view, and you can look at all these reasons here, whether there will be a tightening or not. Okay. Any further tightening, in my view, will depend very much on whether the RBA thinks that things can go worse. The pause has happened for a reason. Okay, the reason is the RBA has acknowledged that there is going to be a delayed impact on the numbers. They wanted to see the number to come down. It has come down. Yes, we are still far away from coming down to below 3%. But if the RBA is smart enough, they know there is no issues, like I said, with unemployment. There is no issues with wages growth. The large influx of people will make sure that wages, there is not a tight wages market here. So we start seeing 10%, 20% wages growth. It's not going to happen. And we are seeing signs of GDP. We're going to see signs of GDP slowing. Those figures are going to come out next month. Inflation is already in check. The retail sales for non-essential goods is coming down. So non-essential goods are what you normally buy in Harvey Norman and JB Hi-Fi and those places. They are actually coming down. Okay. So net, my prediction is we're going to leave interest rates where they are. And we're going to look for more figures over the next month or two. And if the RBA wants to do one more, they will want to see good reasons why, if things start to go the other way, then they might do that. And the other thing is the analysis of why inflation actually is that high and has not come down to 6% yet. Firstly, it is the headline inflation that I'm talking about. Okay, there's another thing called the trimmed mean. The trimmed mean is already coming down to 6.6, and we expect it to go down further. The trimmed mean is a more simplistic way of looking at the inflation. Now, the headline inflation has a lot of different factors. Now, some of those factors that have caused it to be still high is one, we all know about petrol prices and gas prices, and energy prices. We all know about the rentals going up. We'll talk more about that shortly. Those two factors are big, but the one that really got me was tertiary education was another one, and medical costs. Okay, there's hospital costs, that's doctors' costs, there's all of those things have gone up. So there are these factors that sort of have gone up. Food prices haven't come down as much as I thought it would, but the key thing is that people need to spend less. And I think the RBA recognizes that people are hurting already. There is a lag effect with people spending less. People are running out of their savings, and everybody will start tightening the belts. As people start tightening the belts, you're going to see the GDP growth come down, you're going to see inflation come down further, and you're going to see retail sales come down. When those three things start happening all in motion, then you are going to see some big changes coming into our market, which I want to explain to you in a minute. And here we are. So we talked about the cash rate. Okay, we talked about the cash rate. Now, the second most important thing I'm going to tell you today is about the fixed rate. This is what we call the ASX 30-day interbank cash rate futures implied yield curve. What is this? This is one of the factors that is used to calculate the fixed rates. So RBA does not set the fixed rates. RBA only sets the cash rate on which your variable mortgage is set. The fixed rates are set by the banks. Who set the fixed rates at HSBC? When I worked there as head of treasury and as CFO, I did. Okay. How did I set the fixed rates? I created a yield curve which is made of the cash rate, this futures implied yield curve, the futures curve, what is called the bond curve, and what is called the interest rate swap curve, which is a derivative. And you create what is called a future yield curve out to 5 years. Okay. Now, then from that yield curve, you actually set the fixed rates. Now, I want to show you something. So this left one, just focus on the left one, which was 9th of March 23. 9th of March 23, the money market, all the banks, economists and the banks treasury thought that this is what is going to happen with interest rates, that we're going to peak at around 4, maybe go a little bit above 4, and then we're going to taper off a little bit here. This blue line is the cash rate where we are today. Okay. Then what happened are the banking crisis I talked about before that I said I'm mentioning again. The banking crisis happened. And as a result of that, you have seen this happen in such a short time. So this graph hasn't changed much in the last 2 weeks. Okay. So the cash rate is where it is. Any of the graphs going above the cash rate? No. So from here, we have gone here in actually even the 14th of April figure was similar. In about 5 to 6 weeks. And this is the very reason why fixed rates have come down and come down by 0.4, 0.5%, all within 1 month. All within 1 month. Okay. Now, I'm going to make a very bold prediction right here. So what is going to happen to fixed rates when the money market and the banks think that the next interest rate is going to be down, not up? Okay. As soon as the money market thinks the next interest rate is going to be, doesn't matter when, it could be September, October, November, December, could be even January next year. It's not about when. Okay. My prediction says it's going to be in the last quarter of this year when the cash rate is going to start coming down. But the point is, as soon as money market thinks that is going to happen, then the fixed rates are going to come down significantly, very, very quickly. Second half, if anybody listening to me today wants to fix their interest rate, please do not go to the bank and fix your rates at 5.4%. Do not do that. Okay. And the reason for that is you're going to be kicking yourself when in the second half of this year, you're going to see a 4 in front of the fixed rates. You're going to see a 4. Okay. It might be 4.5, 4.6. It could even be 1% below where we are now. So by end of this year and early next year, it is likely you're going to see a 3 in front of the fixed rate. Is anybody talking about this at the moment? No, nobody's talking about it. Why? Because one, they don't understand fixed rates. They're only focused on cash rates. Okay. Nobody is saying that when those fixed rates that people have done at 2.1, 2.2, 1.99%, that they're going to, previously they're talking about, well, they're going to have to fix it at 6%. Now it's 5.4. So soon it's going to be 4. So they're going to refix at 4. Is that more affordable than 6%? Of course it is. So please, is there one takeaway for you? This graph, when the money market, when the banks, economists, and money market thinks it's the end of the rate cycle, and don't worry if it's gone another 25 basis points and I have egg on my face on the first Tuesday of next month. Okay, if I'm wrong, I'll put my hand up and say I made a mistake. Okay, somebody is thinking better than me. But the point is that is not gonna change anything. This is designing fixed rates. Okay, even if a 0.25% happens, this graph will look the same. In fact, it'll probably be sharper falls down here. So keep that in mind. Very quickly, conscious of time, and I do want to leave a lot of time for questions. So this is the cash rates increases in the 4 periods that I talked about. In the 5th one, we don't know what's going to happen yet. What I want to show here is that property prices did not crash in any of those interest rate increasing cycles. So people who talk about property prices crashing because cash rates are going up have no idea what they're talking about. Very important for you to understand that. Okay, that's all I'm going to say on this because of time. Now, this is a very important takeaway for all of you as well. If you're investing in Sydney, you need to understand one thing. These are not my numbers. These are New South Wales Treasury government's numbers. By 2036, we're going to have an additional 2.7 million people living here. 6 million by 2036 and 8 million by 2054. We are a growing city. To cater for this type of growth, and keep in mind, we've had a pause in 2020 and 2021. We're going to have to need another 38,000 to 40,000 dwellings per year. So are we building 38,000 dwellings per year at the moment? Absolutely not. Okay, so keep that in mind. We have slowed down so significantly with our dwellings per year at a time when we are trying to catch up post-COVID on our migration. So twice the number of people are coming here, and we are so far down. We'll talk more about that shortly. But the government spending here on the right, what we are seeing in our city at the moment is significant spend by the government. We're building airport, we're building roads, we're building tunnels, we're building metro, expanding hospitals, building new hospitals, expanding schools, building new schools. All this is happening because we've got to cater for all these people that are coming here. Okay, low unemployment is one of the reasons because of this. Okay, because of this. Government is hiring people. We are all hiring people. We've got aging population, aged care, there's no workers left. So all of these factors bode well for our economy. All of these factors bode well for property prices. We're running out of property. Now, I call this period right now the perfect storm for apartments. You saw before there was an apartment gap. The 7 reasons, I'm going to go through them very, very quickly. 7 reasons, again, I like the number 7. Apartments are due for a rise to bridge the gap with houses. That's the first reason. Second reason, I'll show you a graph on that in a minute. Demand will continue to be strong. In fact, much stronger than I ever predicted. 23-24 will be the highest migration 2 years in our history. God knows where they're going to live. Returning expatriates and students, tens of thousands of students are coming here. Okay, rentals are going through the roof. And we'll see that in a minute. And there's more foreign people buying properties here. Now, I did not put a graph up, but the foreign buying, so REA realestate.com, they put out some numbers last week, and I will remember to put it next time. But they are saying that we have not seen this type of spike in foreigners searching realestate.com. It is the highest spike they have seen in foreign people looking for properties in Australia. Okay. Now, what is the supply issue? Supply issue is this. Only 8,800 apartment commencements in 2021. Why? COVID. Okay, down 70% from its peak in 2016. 2020 and 2021, they stopped building. Everybody is worrying about whether they're going to have food on the table or live. So that was a big factor. We've had all these, you can see all of those issues as well. But fourth reason is rentals are heading up and up, and we have a chronic shortage of properties. Rentals go up, investors start investing, property shortages are there, prices are going to shoot up. Very simple. Affordability issues with housing. Okay. Now, one of the things I haven't got here is that the cost of apartments, developers are telling me that to build a 2-bedroom apartment 3 years ago was around $250,000 to $260,000 to build an apartment. This is the developers, the builders. That cost now is $380,000. So it's gone up by 120, minimum 120,000 to build a 2-bedroom apartment now in Sydney. Okay, have the prices gone up reflected in that? No. Why? I was with a builder this morning, actually, fairly large builder, apartment builder, and he said we're just waiting for this demand to pick up. The rentals are pick up, and we're going to shoot. The prices are going to shoot up. We cannot sustain it at 3 years ago prices. Significant stamp duty saving I've talked about, and this I've talked about. So see this gap here. This is a 30-year graph. This is Sydney. Okay. So what you're looking at here is you're looking at this gap. So houses go up, the red one, apartments also go up. But this gap happened because of COVID. Apartments were not in vogue in the last 3 years. That's what caused this gap to happen. This gap is going to close, not because house prices are going to come down, but because apartment prices are going to go up. It's going to catch up. Okay, it's going to start looking like this again. So that's important. Now, here's one of the most important graphs for you to remember from tonight's session. This is the completed apartments. This is the numbers of completed apartments in the city. So Sydney, 2022, 14,000 apartments were completed. 2023, this number has going down to 9,600 will be completed. 2024, only 4,500 apartments are going to be completed. Why? Because of 2020 and 2021, there were the lowest starts in apartments. It takes 3 to 4 years to build apartments. By the time you get the site, by the time you get the DA approvals take 1 year. Then you have got to have the CC, that takes another 6 months. Okay, the construction certificate. Then you start building, that takes another year and a half, sometimes 2 years. That process, because of that process, we are going to see record low apartment completions in Sydney, 9,600 this year, 4,500 next year. At a time when, remember, supply demand was my number one needle mover on property prices. At the time when demand is going, the graph is going that way. So you don't have to be a rocket scientist to work out that even if nothing else happens, just this factor here alone, supply and demand, the prices of apartments are about to go up massively. Okay, we are talking 20, 25, 30%. Now, you might not believe me, but you probably did not believe me in December 2020 when I said house and land prices are going to go up 30 to 40%. And it did in 2021. I'm telling you now, it is due for apartments. So what's the government doing about this? The government is doing what they normally do. It's a knee-jerk reaction. So they have released more land. They're going to rezone more areas. So apartments and higher density buildings can go up. Too little, too late. Already we have got an issue. So 70,000 extra lots for homes are going to be released. Big deal. Has any of this been released yet? This was news in December 5th, 2022. Nothing has happened so far. And I know all these areas. There's no rezoning has happened yet. So too little, too late. So what is happening? Rentals are going through the roof. I'm sure all of you know this, and they're not going up like $500 to $530. They're going from $500 to $650 in one hit. Okay, Wentworth Point, a good example, a 1-bedroom apartment. My daughter was actually renting there. 1-bedroom apartment was $430 she was paying. Apartment came for renewal 2 months ago, $620, from $430 to $620. There's a 3-bedroom basic apartment in Wentworth Point, which is just rented out for $1,200 a week. Not a penthouse, just an apartment, a 3-bedroom apartment. So what is happening in our city is a once in a lifetime chronic shortage of properties like you have never seen before. Okay. Is this problem going to go away in the next 3 or 6 months? Absolutely not. You can't build properties overnight. So this problem is only going to worsen in the next 12 months, 18 months, 2 years. Why? Because we're not going to put a stop to migration. We need migration for a number of reasons. GDP growth, employment. We're going to fix the employment. Unemployment has to go up to 4.5, which is probably a healthier place to be than 3.5. Okay, a bit more about rent. So this is Sydney. We're at 0.9, hasn't changed much from February 23, but the numbers you're going to see in the coming months, this is going to chronic levels. We're going to go to 0.5. You can't keep up with demand. You can't build new properties. Okay, so this is going to be a big issue. What was this during COVID? 3.9. Okay, so Perth, people are already starting to live in cars, and I'm not exaggerating. Okay, caravans are being bought and caravan parks are full now. So this is becoming a big issue in Perth and Adelaide. Look at that. Brisbane's a big issue. So this issue will continue. You'll hear more about the rental crisis and the shortage of properties and the migration of people. That'll be the 2 main issues that the government has to fix in the next 2 years. Every day you're going to hear this more and more in the news, and nobody will have a solution because they did not solve the problem 2 years ago. When did I first predict a rental crisis? 2 years ago. Okay, very simple graph. Economic growth brings jobs growth, brings wages growth, brings population growth. That increases rental and buyer demand. We are seeing this right now. We're already seeing this. Increase in property values. It's very simple. When buying a property, you've got to be cognizant of a number of things. Okay. People say location, location, location. I say location, absolutely very important for the 3 reasons there. You always got to make sure that you're buying in an area of growth where population comes. If there's no population coming in an area, forget about buying. You got to have demand. You got to have population growth. You got to buy in an area where there's going to be significant population growth. Okay. That's what pushes it up. So the other one is price. Whenever you buy a property, you've got to buy at the right price. I call it wholesale price. Never, ever pay a premium for a property. I have a lot of examples I can give you of people paid a premium for a property. They paid $1 million for a 2-bedroom apartment in Wentworth Point and Rhodes 3 years ago. Okay. Now they're wondering why the prices haven't increased. That has happened to a lot of people. You've got to know what the entry point is. That is where we come in. We go and do a research. We do all the hard work, and we try to promote a product where we would buy ourselves and we would like our buyers to buy. Timing is very important. Like I said, it's a perfect storm right now. Perfect storm for apartments. Okay. Timing is important because of a number of factors. One, we're on the verge of seeing a boom in the apartment market. There's no properties. As you've seen my 7 reasons. For all those 7 reasons, I cannot overemphasize. Those of you who are listening to me, who've only been here for 3 years, has not seen a property the prices go up for apartments. I'm telling you, I have been buying here for 40 years. And I can tell you that this is the perfect time to buy the right apartment at the right price, at the right place. Okay, I'm not going to suggest $1 million apartment in Lidcombe to you. Absolutely not. So timing wise, all the developers I talk to, and I talk to a lot of property developers, that's what I do all week. I'm telling you that they are all just waiting to push the prices up. Okay. And it's very important to, who the builder and developer is nowadays. So we have a project in the northwest of Sydney, which I'm going to show you in a minute. And we're very excited about it. Why the northwest of Sydney? Okay, I'll let you go through all of these. These things are all important. Northwest is going to become bigger than Canberra in 80 years. We've got an airport coming here. We've got a metro that's going to connect northwest to the airport in about 5-6 stops. The Aerotropolis, I can't get my tongue around this one, is going to come one stop after the Badgerys Creek Airport. We're getting a lot of jobs created in the northwest of Sydney. Okay, this is the big factor, the population growth. That's the big factor. These are not my graphs. Again, New South Wales Treasury graphs. So the suburb I'm going to talk about is actually Rouse Hill. Okay, this is the most recent property data for Rouse Hill. The median price for a unit is this. The median price for a house is this. This is a massive gap, okay? I'm not saying house prices are not going to go up. House prices are going to go up. This figure is going to go up to 1.5. But this figure here is going to go up somewhere around that 900,000. It has to. There is no question in my mind it will, okay? And it's the population growth that's going to bring this. So units are already starting to show performance in this suburb. Have a look here, okay? House prices are here. Unit prices are here. Quarterly growth. Houses have come back. Apartments are there. I won't dwell on the demographics because I want to show you shortly the project. But few of my past predictions, again, I'm not going to dwell on this. But if you want the article I wrote in the papers about why property prices are going to go up 20% in 2021, which I wrote in mid 2020, when everybody was predicting a 25% fall. I'm happy to share the article with anyone listening today. And there are good reasons for that, okay? Interest rates, I told people in July, August 21 to go fix the interest rates. Don't believe the RBA governor. It is going to go up by middle of next year. And of course, it has started rising, as you know, from about straight after election time. And rental crisis, of course, we all know about. So my predictions for the next 12 months. I reckon this is where we're going to peak. Although, if I'm proven wrong, I'm happy to take that knock on my head, okay? So we shall see on the first Tuesday of next month. Inflation, I expect it to fall to 5.5 by June 23, 4% by December, and 3% by June 24. So cash rates should start coming down, okay? Around September, I reckon cash rates will start coming down. And it's going to start falling rather quickly. Why? Because I reckon the third quarter numbers, by the time the third quarter numbers come out, we probably are going to see a negative GDP growth. And the reason why I say that is people will still start to really feel the pinch by then, and the spending will slow down by then. Okay, we might not, but we might see a small negative growth in the quarter 3, which will push the RBA to start cutting the cash rates. But the big story for you today is the fixed rates. Fixed rates are at least going to be 1% below variable, at least, but it could be 1.5 or more. So don't be surprised by December 23, the fixed rates, okay, I'm talking about 3-year fixed rates, 4-year, 5-year fixed rates, they could well be around the 4 to 4.2%. Early next year, you might see a 3 in front of it in the first quarter of next year. You probably could see a 3.5 again. Okay, so don't rush and go and fix your interest rates with CBA now at 5.4%. That would not be a wise thing to do. Okay, and sorry, unemployment, as I said, will keep creeping up. 4.5 is a good place for unemployment. Before COVID started, we were at around 5.1, 5.2. That's not a bad place, but 4.5 is still very healthy. 3.5 is not a healthy place to be. Okay. This is the project I want to quickly run through, and then we'll go for questions. It's at 41 Terry Road in Rouse Hill. It is a combination of apartments and townhomes. Binay is the builder. Architect, one of the top architects in Australia, Rotherman. A very unique development. Firstly, it's unique. So very quickly, Denville is the developer. They bought the land outright. This land was bought outright by them a long time ago, around 30 years ago. They don't have a cent owing on the land, okay? That is one of the reasons why they can reduce their prices. They probably bought the land for $500,000, okay? When today it might cost you $30 million, $20 million, some big number. So that's the builder. The well-known builder, Bina. We've sold other properties before. They do commercial as well. They build Western Sydney University. This is a project in Liverpool. This is the Atrium project. So they've done a lot of projects. This project, because it's Babylon, it's going to be built like Babylon, will have a lot of greenery around. So they've hired Mike Horn, who is one of the best landscape designers, who's done all of these landscape works here. Excuse the blur on this slide. And he's very well known for his landscaping prowess. Now the location. So the location is here. Okay, this is the location. This is the land where it will be built. So if you walk out of here and you go through this street, you come onto Windsor Road. You walk from there to here, which takes about 10 minutes. You're at the new hospital. This is the new hospital which is started, and it's a $350 to $400 million project. This is the Rouse Hill Shopping Center, and this is the metro. So you're about 10 minutes walk to the new hospital, which is going to be ready around the same time as this will be ready in the next year. And you are 15 minutes walk to the metro and the Rouse Hill Shopping Center, which will also increase back here by 1.5 times. Already it is a massive shopping center. Another 50% increase is happening on this side. Okay. You're also equidistant to this metro and to the Tallawong metro here. So excellent location, great transport, 2 minutes drive to everything. Okay. And this is and this hospital is one of the biggest hospitals that will be there in the Northwest to cater for the big growth in population in the Northwest. A lot of different things happening here. So just very quickly. So we're very close to metros. Currently, more than 556,000 people live in the Hills District. Forecasted population growth to more than 250,000 by 2036. 250,000. Okay, this ticks all my boxes. When I look at my top things where you buy properties, it ticks my boxes. There's a huge expansion there. Okay, and Norwest Business Park is 2 stops from Rouse Hill. Actually, sorry, 3 stops. 3 stops. It literally takes about 7 to 8 minutes. This will be one of the biggest business parks in all of Australia. Already is massive. Okay. And the Hills District is set to become Sydney's economics hub. So there is significant, you could say this is where all the action is, not just in Sydney, but in all of Australia. The only other big thing that is happening in the West is the airport and the Atropolis. So these are very, very good reasons why you should buy here. Now, this is some shots of what it'll look like. So I said there'll be a lot of trees, a lot of greenery, a lot of water features. So they want to build it like a Babylon and make it look nice. It's not a high rise. This is definitely not a high rise. Okay. Here's another one. This is not a swimming pool. It's just a water feature. There's seating areas. There's places to relax in the complex. Now, there are 3 different types of residences here. You've got court and garden terrace pavilions. So some of them are double story. So you get a courtyard downstairs. I'll show more photos. You've got the typical apartment, which is on 1 level. And you've got some residences which have their own sky terrace. They're the 3 different types. Okay. Very unique. This is a common rooftop, which is everybody can use, but some people will have their own, like I said. Now, in terms of finishes, you've got timber floors. You've got in some apartments, this double story type ceilings where you've got like, double story courtyard type apartments. You've got marble bench tops, not Caesar stone, pure marble bench top, pure marble splashbacks. All soft closing cupboards, 2.7 meter high ceilings. You've got ducted air conditioning throughout. You've got plush wool carpets, not your cheap acrylic carpets. This developer is going to make this the best quality apartment development in the Northwest. Okay, this is going to be the prized development. So the list goes on. This is what a courtyard apartment looks like. So you've got a 1 bedroom or 2 bedroom in a courtyard, and you could be a single level or you could be a double story. Okay, unique development. This is what a rooftop. So if you're on the top floor, you might have your own rooftop garden. So of course, this is your own private rooftop garden. Okay, all the planting will be done, as I said, by the developer. Sorry, the furniture doesn't come with it. So very quickly, a few plans for you. I've probably gone a little bit over time, but this is what a typical sort of 2-bedroom with your own rooftop garden sort of looks like. Okay, very well laid out plans. Here's a double story with a courtyard. This is a ground floor courtyard, and of course it's a double story one. You got internal stairs there. I'm running through this quickly. Here's another one, which is just a 1-bedroom apartment, but it's got a terrace and it's got a rooftop terrace. Okay, so you've got a lot of different combinations and a lot of different plans to choose from. Here's just a simple apartment with a terrace. They're focused on quality. They have focused on no wasted space. They're focused on privacy. So you're ticking all the boxes here. Now, why are we so excited? So we started selling this product a month ago. And this is what I mean by buying at wholesale prices. There are about 340 plus apartments here. So there's a rebate at the moment. There's a rebate at the moment, and the rebate is 5%. This rebate is going to come off very shortly. How quickly? In about 2 to 3 weeks. Maximum 3 weeks, minimum 2 weeks. Why are they doing a rebate? Because they want to kickstart the sales. Okay. And I'm telling you that at these type of prices, you are not going to find anything in Rouse Hill even near the quality. So we have other projects. We have about 50 projects in Sydney. Why are we picking this one? Okay, the reason why we're picking this one is this is a unique development that everybody will talk about. It'll be the most sought after place to go and rent. And you are picking it up below market price, well below market price. That is why we are excited. We know that when this 5% rebate is taken off, that you already made a 5% gain. By the time the apartments are completed by the end of next year, I can't put a figure on how much gain you'll be sitting on. Okay, you could be sitting on 10% minimum, maybe 15%, maybe even 20%. And what are you paying now? You're only paying 10% for the apartment now, and then you sit and wait until in the next year. There are only 2 agents on this. It's low strata, no gymnasium in the complex, no swimming pool in the complex. That's why the strata is going to be low. And the rental returns, I don't have to tell you the rentals, it's going up every week in this area. So stratas are for 1 bedrooms around $650, for 2 bedrooms less than $1,000, 3 bedrooms less than $1,500. These are really low stratas. Okay, these rentals, I wouldn't worry about looking at these rentals, because by the time end of next year comes, you can probably add another $50 to $100 on them. My concluding comments to all of you listening is, please do not blindly follow the media. Do your due diligence and speak to experts. When you're buying property, you've got to build a portfolio. If you're an investor, if you're a first-time buyer, you're going to find something where you want to live in. Take advantage of the government's rebates, government's concessions. Take advantage of the builder rebate. That will go away very, very quickly. And the reason why we ask people to, if you're an investor, to pick one of these type of properties is, 1, it is unique. 2, your value will never go down. So by the time your bank valuation comes at the end of next year, when you're actually looking for your loan, you will more than likely, okay, I can't sort of put my hand on my heart and give you a figure, but more than likely you'll be seeing a capital gain already. Why do we buy properties? Why are Australians the richest per capita population in the world? It's very simple. They own properties, and property values always go up. Do not be surprised if by 2030, not that far away, that there will not be any 2-bedroom apartments below $1 million brand new in Sydney, anywhere. Do not be surprised. So if I take an example, Blacktown 2014, Blacktown brand new apartment, 280,000. Don't believe me? Go back and have a look. Today, Blacktown, brand new 2-bedroom apartment, 580, more than doubled. Okay. So if I am saying by 2030, you are not going to see any apartment, but why should you go and buy some 2-bedroom apartment for 750 today in Rouse Hill? You can buy a 2-bedroom apartment here for 650, 660, 670, 680, 700. Okay. And all you have to do is pay your 10% and sit and wait and watch the price grow and watch the rentals grow. Australians are the richest per capita population in the world because they accumulate properties and property prices keep going up. We've gone past Japan, we've gone past Switzerland. That is the key reason why. Okay. If you need one-on-one discussion with myself or any of my team members in Nivas, we don't charge. We're here to help people accumulate wealth through property. Okay. And here's some of the contact details of the people. And I've done enough talking, so I'll stop there. And I'll leave that there for 30 seconds. But you can take our numbers down if you wanted to call us and have a chat to us and make a time to speak to us in more detail about your individual requirements. I'll stop sharing and we will take some questions. And sorry again for going over time.
Thanks for that, Sachin. Much appreciated. Okay, so to start off with on the chat, we've got a question from Vanya Dogra. Melbourne's population is forecast, Melbourne population forecast has more growth than Sydney. Do you think property growth will move in the same direction in Melbourne?
Good question. Thanks for the question. Listen, it's sometimes it's very hard to put a finger on which city out of Sydney, Melbourne, Brisbane will go up more, which type of property type will go up more, which suburb will go up more. Property even in Sydney is like there's probably 50 markets in one city. Okay. So in some suburbs, prices might grow for houses and not for apartments as much, and vice versa. So it can vary from suburb to suburb. So that's why I don't want to generalize and say that all of Sydney is going to do better than all of Melbourne. Because some Melbourne suburbs and some type of properties will do better. Now in Melbourne, of course, apartment was well known in the last 5 years that apartment supply was much higher than demand. So apartment market has been very, very subdued in the Melbourne market. And people who are going there and buying apartments in the last 12 months, they will all do quite well, so long as they bought at the right price in the right place. Okay. So listen, this is also a phenomena. The rental crisis is all over Australia. Okay. The good things about us in Sydney is that gap between house and apartment price has gone bigger than any other city in Australia. And I think that is going to close really, really quickly. Okay. The rental side, our rentals are very high. So if you were to buy an apartment in Melbourne, their rentals are actually come third highest in Australia. Okay. So keep that in mind. The second highest rentals are now in Brisbane, Southeast Queensland, not in Melbourne. Sydney is the highest rentals and going crazy. The second highest is Southeast Queensland, followed by Melbourne. So listen, do your research. I'm not gonna talk anybody out of buying a property so long as you're ticking all the boxes. We use actually in Nivas, we have 10 boxes to tick and then we give a rating. So when we looked at this project, it ticked my 10 boxes. Okay. If anybody wants to know what those boxes are that we tick, please reach out to us and we will be happy to share that with you. It is built by myself through my very long years of experience, and I'd be happy to share that with you as well. Hope I've answered your question.
Thanks, Sachin. Appreciate it. Sumit, with the current trend, we've seen a decline in apartment prices. What's your view over the next 5 years?
I wouldn't even go 5 years. The next 3 years is a major, major boom for apartments. Okay. You saw the supply and demand graph that I showed. That is the most powerful graph. Apart from that, the new apartments that are being built, they can't be built for 260,000 anymore. One developer said 360 to me, another one said 380, a third developer even said 400,000 to build apartments. These are builders, these are apartment builders that have been doing it for 10, 20 years. Okay. So listen, it's a no-brainer. It's a no-brainer. The apartment boom over the next 3 to 5 years is going to be massive, with the influx of people that are coming here, with the rentals. Rentals, you ain't seen anything yet. Try adding another 25% in the next 12 months to any rental figure today. Okay, could be more, could be more. So this is, two things are happening. We've got the highest intake of people in our history in the next 2 years. At the same time, we have got the lowest completed apartments probably in the last 20 years. Okay, those numbers speak for itself. Of course, after 2 years, you might slow down on the population growth. After 2 years, you might see a few more apartments coming up than what we have seen in this coming 2 years. So those things will balance out, but you can't underestimate how much this price growth is going to be.
Awesome. Thanks, Sachin. Okay, next question from Zoom user. What's your view on house prices over the next 2 years?
Listen, firstly, there is no crash. Okay, there is no crash happening. Land values have gone up. So there's a question there on Marsden Park. Is that the same question? No?
Different. Yeah.
Different. So International Economic Fund says we have too much. Is that the one? Debt?
No. Further up.
Sorry.
Yeah,
Sorry,
at
my
742.
apologies.
That's all right.
I'm still getting used to the technology here. Okay, sorry. So now I'm with you, Zoom user. What's your view on house prices next 2 years? It's going to go up. Okay, it's going to go up for the very simple reason. Two reasons that are going to cause a mini boom. Okay, one is the influx of people. So at the high end of the property prices, the 2 million, 3 million, 5 million, 10 million, the overseas demand, the expatriates, the people who are searching for properties here, safe haven, that will continue to be strong. So you will still see a lot of reserves broken in auctions, gone 300 over, 500 over, million over. That then comes all the way through, the wave comes all the way through our market. The reason why land values and house values went down as much as it did in some suburbs in Sydney, and I'll quote some suburbs, Box Hill, Marsden Park, are two examples, okay, is because they went up so much so quickly. So average price growth in Sydney in 2021 was 25%. How much do you think land growth was? 80% in some suburbs like Box Hill and Marsden Park. Of course, you're going to see a correction. Of course, you're going to see some correction. So it has corrected a little bit. Let's say it's corrected by 20%. But hey, those guys who bought 3 years ago, they're still sitting on a huge profit. So now two things are happening. The supply is really low. Most of the northwest of Sydney is already flood zone. We just had a once in a 100-year flood. So what's the council done? They've done a new study and they've crossed out a lot of areas cannot rezone, leave it as rural. So the number of land that is going to be released in the northwest is only going to come down. See the big picture, okay? The Hawkesbury Shire, there is hardly any land. Most of it is flood zone. So you've got little bits of land left in Vineyard, okay? In a few Oakville, there's only a little bit of land left. And who's buying them? These people are all buying them, the home builders and the land developers. So there's going to be very little land and the demand is going to be high. What's going to cause the demand to become even higher and cause the prices to go up? It's the fixed rates first, not the variable. It's the fixed rates first. So that fixed rate is going to start coming down big time from June, July this year. Okay, that comes down, demand goes up, you start seeing those values go up. So I didn't show my predictions for the percentage increase in house prices and apartment prices that I've got for 2023 and 2024. But I haven't revised it. And I'll share it with anybody who wants to see it. In middle of last year, I had apartment prices going up by 18% this year. Okay, I will still stick with that. And that's the time when the big four banks were all down between 8 and 12% for 2023. All the big four said 2023 house prices coming down between 8 and 12%. What has happened last month? They've all revised. All the big four have come out and revised. They've revised from -8 for this year to +1. Westpac was the one last week. Westpac said, oh, sorry, we got it wrong. Now, we think it's going to be a 1% increase this year, not an 8% negative. They always get it wrong. They are clueless. Okay, they're clueless. And the point is, you've got to just look at the basics that I've shown you today. The basics, just follow the basics and follow your intuition. And you're going to get it right more times than those economists. So the house prices are only going to go up. Land values are only going to go up. The correction we've had to have has already happened. Interest rates are not going to go up another 0.5%, another 1%. Okay, that's already behind us. If you're waiting for the bottom of the market, that happened in January. That was the bottom of the market. From here, it's only up, flat or up, flat or up. There's no down happening. Okay. Now, different story if Taiwan gets invaded by China tomorrow, then we might have a different conversation. Okay. But this is with all things equal. I cannot see how prices are not going to only see growth. House prices less so than apartment prices for the 7 reasons that I pointed out today. Next question.
Awesome. Thanks, Sachin. Next one is like to understand. So this is from Chad Chadvi. Basically buying a house in Sydney on a 270 square meter block versus buying a house in Melbourne on a 550, both 1.4. Which would you go?
Thanks, Chadvi. I wish I had a crystal ball and I could tell you. I would say right now, you just gotta make sure whatever you buy, so obviously you're more house inclined, and of course we sell house and land packages as well, and be happy to talk to you. Listen, it's a very hard one actually. I would say with Melbourne's population growth, you can't go wrong. It's still cheaper, much cheaper than Sydney to buy there. 30 kilometers out of the city, 25 kilometers out of the city. It's definitely a lot cheaper than here. If you go to Brisbane, it's cheaper again than Melbourne. My first pick at the moment is Sydney. My second pick at the moment is actually Southeast Queensland. Okay, and there's good reasons for that. Southeast Queensland prices for a house and land is still relatively cheap. Very cheap. They also need 30,000 homes a year. There is Olympics coming up. There is a lot of things happening there. So if you are house and land inclined, I would also look at the comparison with Brisbane. But Chadvi, there's no crystal ball and there's no magic wand to answer your question. More than happy to have a more in-depth discussion with you offline. And we can look at your individual circumstances and make some suggestions and recommendations. Yeah.
Thanks, Sachin. Perfect. Next one is, how would Perth's capital growth be for an investment property if you were to buy a house over the next 10 years?
Listen, Perth is a good market to invest in at the moment because prices haven't gone up all that much. It has gone up a little bit, but not that much. Still very, very, very affordable, even 15 kilometers out of the CBD. And I was there not long ago in February, actually, to check a few things out. The thing with Perth is it's a very mining-driven city. Has always, historically, it's been a mining. So when you had a huge investment in mining, the prices went up a lot. When the mining investment came out, there was a huge fall. Will that sort of continue? Not as much. So, it's not going to see a big jump and a big fall again. You might see a jump, but maybe steady on for a while. The biggest thing is population growth. Like I said before, you've got to pick an area with a huge population growth. Northwest of Sydney is going to be the biggest population growth anywhere in Australia. Okay, so that's why I am bullish about this area. But will Perth's property prices go up over the next 10 years? Definitely. Property prices are going to go up everywhere in Australia in the next 10 years. It's about how much. In 10 years, if you only see the property prices go up 30% in 10 years, you won't be happy. Okay, but it will still go up. In other places, it might go up 100%. In some places, maybe 120 to 150% in 10 years. So it's about making those choices now as to where to invest. Don't just do it based on today's rental return. Don't make that mistake. Definitely don't go through. If you're buying in any regional area or away from any high population growth area, be very careful. I'm speaking through experience. I've bought everywhere. I bought in mining towns. I bought in regional areas. I bought in cities. And at the end of the day, I will say to you, stick to cities, growing cities. Stick to the 10 things that I have on my list that I'm happy to share with you, and you will never go wrong. Okay. Next one.
All right. Awesome. Thank you. Next one is from Nitish. So it seems to be a lot of apartments in Rouse Hill. Do you think this is going to lead to future oversupply? I think you answered that. Yeah. Very
good question, Nitish. Excellent question. Listen, we sometimes actually think about, and a lot of people at parties say to me, listen, what do you mean apartments construction is slowing down and it's going down? They don't see the numbers, right? They don't do the research. They just see the cranes and apartment buildings going up. They're not doing the counting. So the thing is, and Nitish is absolutely right, there is a lot of apartment construction happening in Rouse Hill. In fact, all of the northwest. Okay, even in Box Hill, there's lots of apartments coming up. Even in the apartments we've got in sale, by the way, in Rouse Hill with these 5-star finishes are cheaper than the ones in Box Hill, where if you go to Box Hill and you start coming to Rouse Hill, it in traffic takes you 15 to 20 minutes. There's no public transport nearby. There's no shopping center at the moment. So you've got a value pick. But the reason is the New South Wales Treasury numbers you saw on population growth, that population growth that I'm talking about, 6 million by 2036 and 8 million by 2054, those numbers have been broken down by New South Wales Treasury by suburb. You please do it yourself. Go to New South Wales Treasury website, go and see the last census reports, and go and see what is planned for those. So when a council is actually approving more apartments in an area, they are actually looking at, so Schofield is a good example. Schofield, you've seen so many apartments come up, and more is going to come up. Why? Because Schofield population will double. In how long, Krish?
I'd probably be looking at now the next
7 years.
Less, probably the next 5 now. Yeah.
So that's the reason why, Nitish, the councils and the government work together with the rezoning, with allowing this high density, because they know the population. Rouse Hill will be it will be a city in its own. Okay, huge shopping center. You don't need to go anywhere else. Hospital, schools, everything at your right. So that's where the growth is going to be. It's a savvy place to stay. That's why price growth will happen there. If I compare Rouse Hill right now to Norwest, which is, as I said, 7 minutes on the metro, 7-8 minutes on the metro. In Norwest and in Castle Hill at Showground, we are selling apartments there. Okay, I can sell you a Malfa apartment for 950,000 to 1.1 million, 2 bedrooms in Norwest. I can sell you one. Why am I not selling you? Because it does not have the potential for growth. It does not have that potential for growth. Are you far away from there? Absolutely not. I would rather buy a 670,000 2-bedroom apartment with this quality, 7-8 minutes away from Norwest, and you just watch the price grow. Can it grow to 900 in a short period of time? Absolutely. Absolutely. Okay. So you got to see that big picture. We see that every day because we sell all over Sydney, we sell interstate. So, and we talk to the developers every single week. So don't be put off by the construction and the type of constructions that are coming up. People will compare quality, and they are the ones. So Tallawong Village, we also sell at Tallawong Village right next to Tallawong Metro, the Daycorp project. If anybody listening today is interested, please see us. But this project, the rebate is there for 5%. It's coming off in 2-3 weeks' time. Our focus right now is on this project. It's a no-brainer in my view. Okay, it's a no-brainer. So hope I've answered your question, Nitish. If not, please contact us outside of this.
Awesome. Thanks, Sachin. Next one. So how do these apartments, how do these new apartment projects compare to existing apartments in other CBD areas like Parramatta? They're the same price and offer same rent.
Yeah, listen, Parramatta is a good place. We sell in Parramatta. We can sell you a Meriton there. We can sell you so many properties in Parramatta as well. Listen, Parramatta is a growing city. Parramatta also has got a lot going for it. There's so many high rises now. All of Church Street there, where you've got the second-hand car, all of those have been rezoned. All will be apartments. There is a lot of apartments coming up there as well. What Parramatta suffered with a little bit over the last 3 years, if people bought an apartment there, say 3 years ago, they've been waiting for a price increase like everybody's had, has been a bit of an oversupply issue. That oversupply issue will be absorbed fully in this coming months, and you will get a same problem. You'll get a shortage there as well. Okay, but they have been zoned for very, very, very high rises because Parramatta is going to be the next big city. Is there a big difference between buying in Parramatta and Rouse Hill? Not a huge difference. Okay, Parramatta is not my number one choice. This project is my number one choice because of your entry point and because of the potential for growth. In terms of rentals, not dissimilar. Okay, similar rentals, but rentals are going to grow everywhere in Sydney. You can't say, well, I'm going to run away from one area to another area and save $100 in rent. It's not going to happen. Not going to happen. Okay, we have we can sell you a brand new completed 2-bedroom apartment in Wentworth Point today for $750. Yeah, not a huge difference from $680 what we're selling here. Okay, rentals there are much higher. They're already at about 2 bedrooms, Krish, at about 800.
2 bedrooms are now between 8 to 820 unfurnished. Yeah.
So, and that's grown from about 650 in the last 1.5 years. So, listen, I don't want to knock any area. All this is all about buying at the right price, the right project. Okay, and you watch the prices grow. The prices are going to grow everywhere. I don't have a crystal ball, but all the indications based on our research says that buying in something like this, you're going to get a lot more capital growth than buying in other areas. And that's why we're not focusing on the other areas at the moment. Now, in 6 months' time, we might be very different for whatever reason. We might find a project in Blacktown that might be the best buy in Blacktown, and we might be pushing that project instead. Okay, so we focus on where we're going to get the best bang for your buck, the best value for you right now and today. Thank you.
Perfect. Thank you.
Buy in Blacktown then?
Yeah, you got it.
Yeah, Akshay, you want to buy in Blacktown? We are happy to sell you in Blacktown. We have got some excellent projects in Blacktown as well. Is it our number one pick? Now, this is our number one pick because this is a suburb that is experiencing a lot of growth and going to continue to experience growth. Blacktown is a fantastic suburb as well. There's going to be a lot of great things happening in Blacktown. So buying in the right project again. We've got a couple of very good projects there which are well priced. So please do speak to us, and definitely Blacktown is going to grow as well. It's got a hospital, it's got shopping center, it's got train station. It's also going to be very well connected to the airport, to the city, and so on. lot of investment is going into Blacktown. So absolutely, you are correct, Akshay. It's not. It's about buying there in Blacktown at the right price, buying the right property. Just like I said before.
Perfect. Thanks, Sachin. All right. So one here from Anuba. I think you have touched on this. So how does price appreciation compare to apartments in the CBD and Wentworth Point? So I think, as you mentioned,
Yeah, listen, prices will go up everywhere. Like I said, prices are going to go up everywhere. The CBD has had huge increases in prices, huge increases. Okay, some of those new buildings in the city, whether it's Barangaroo, the plush ones, prices have gone from 1 million to 2 million to 3 million in some of the 2-bedroom apartments. Wentworth Point, the thing with Wentworth Point, Rhodes, Lidcombe, you got a Meriton in Lidcombe, that those 2-bedroom price points around that 900 to 1.1 million. I don't fancy those. I do not fancy those in terms of price appreciation. Well, are they going to go up? They will go up. Okay. But people ask me, as they say, I bought a $1 million apartment in Rhodes in 2020 or 2019, and I haven't seen any growth. And everybody in 2021 is talking about, I bought a land in Tallawong and it's doubled in value. So what happened? I said, well, you bought at a premium, you bought in the wrong place at the wrong time. So we need to be cognizant of that. Everything goes up, some more than others. That's what we need to be focused on.
Perfect. Thank you. Siam, I think.
Marsden Park and Box Hill, Siam. So, which doesn't have many facilities. Yeah, listen, Box Hill is an interesting one. It's getting a vertical school. It's getting a shopping center. Because Rouse Hill is going to run out of land, people are going to go to Box Hill. Some people have already paid a premium for land there, but I would say to them, hang on. It'll come in vogue again. Transport is not great there. It's not going to have a station, but you're not too far away from Rouse Hill. So it's not my Marsden Park. I would be more bullish Marsden Park than Box Hill, to be honest, at today's prices. So if I were to pick between Box Hill and Marsden Park, at today's prices, I would go Marsden Park.
Same.
It's going to have a metro. It's going to go to the airport and Metropolis. It already has quite a lot of infrastructure there. There's going to be significantly more jobs being created there. Okay. And so from a transport point of view, infrastructure point of view, I think both have come down in price. Right now, Marsden prices look attractive. Box Hill is also attractive, and prices have come off quite a bit, so it does look attractive, but it wouldn't be my number one choice for some reason.
Awesome. Thanks. Sorry. Okay, next one. This one is from Ashish. So once the airport opens, Austral and surrounding will grow, and will this impact Marsden Park and surrounding suburbs prices too?
No. Ashish, will Austral prices go up? Absolutely. Will Leppington prices go up? Absolutely. Will Oran Park and all those places, Gregory Hills, we sell everywhere. Will they go up? Absolutely, it'll go up. Everything's going to go up. Okay. So will that impact Marsden Park prices? Not a chance. Not a chance. I would rather live in the Northwest than in Austral any day of the week. It's a better suburb. It's got better schools. It's got better connectivity. It's got better demographics. Okay. And that's where your value creation is going to be. What type of people are moving in those suburbs? So yes, Austral will go up. Austral already has gone up, and it'll go up further. All those suburbs I just mentioned will go up as well. Sydney will go up everywhere. Okay. The biggest arbitrage we have in the property market at the moment is apartments versus houses. It's about my main message to my listeners today is, if you're going to look at apartments, it's where to buy, at what price point, what type of project. Okay. It's got to tick the 10 boxes. So these are mostly, I guess, about house and land. So yeah, airport. I mean, in Marsden Park, you're going to be 4 stops to the airport. I mean, 4 stops right? So it cannot go down in price. Don't worry about the little correction we've just had. For those people who bought 3 years ago and are sitting on 80% more in land value, don't worry about 20% correction, okay? Don't get concerned about that. Things are gonna turn. Watch the fixed rates come down and then the cash rates go down. And then the floodgates will open again. It's not far. Just have to wait for 9 months. Floodgates are gonna open. Don't do a fire sale of your property right now, thinking that prices are not gonna grow. It's gonna grow.
All right. So next one from Zoom user, the International Economic Fund says we have too much debt and prices will crash. What's your thoughts?
Is that the IMF?
IMF, yeah, I believe so.
Okay. Listen, the IMF, the World Bank, the Northern Hemisphere investment banks like the UBSs and the Goldman Sachs and the Morgan Stanleys, all those guys, they have no bloody idea, no clue about property prices in Australia. Zero. Okay. These are the same people who have been calling a crash here for 30% crash here. I've been here 40 years. I've been listening to these guys. If you want to invest in property in Australia, don't even look at them. Don't read anything they publish. They have no idea. And I'm not just talking about them. When I worked for HSBC as CFO here, I had to convince the people in Hong Kong and in London all the time that there is not going to happen, the crash is not going to happen here. Because we also had 50% of our book was retail mortgages. Every month I had to explain it to them. They do not understand this market. This is one of the fastest Western cities growth in the world, okay? We are not sitting in Spain and Netherlands where prices don't grow. In America where prices crashed because of the global financial crisis. It did not crash here. So I would say that's my short answer for that question, okay? But happy to have a more in-depth discussion and debate. If you wanted to, you can call us.
Perfect. Thanks, Sachin. Manu, so what's your prediction on land prices? Would there be an increase in demand for land lots?
100%, Manu, 100%. It's about to happen, okay? There's a shortage. I work with land developers. I work with Castle Group. I work with so many land developers. I am telling you, there is a shortage of land. Everybody is looking for land in the northwest of Sydney at the moment. Everybody is looking, okay? And cheap land is no more. So the land prices are going to go up. So 5 acres, when the market bottomed last year, you could buy a 5-acre unzoned land, okay? Beginning of last year, you could buy a 5-acre unzoned land in Rouse Hill for around 10 million. Today, if you want to buy that same unzoned land, it's 14 million. Even at 14, you're not going to find it. Okay, undeveloped, unzoned 5 acres. So when it gets zoned, it's going to be 18 million. When it's developed and sold individually, it'll be 30 million. So my point to you is there's a shortage. Prices are going to turn around again. The demand is coming. The tsunami is coming. They are going to go up. No question.
Thanks, Sachin. Amit Bharti, so currently owning a house with a home loan at 5.4%, will it be a good idea to continue to stay on variable? Also, when would be a good time to move to fixed?
Yeah, good question, Amit Bharti. Listen, just wait until second half of this year. The longer you wait, the more it'll fall. So take the pain at the moment with your variable. It's not going to go too far above where we are at the moment. Take the pain for another 6 months and just watch the fixed rates going down. If you want to fix when it gets to around 4.1, 4.2, okay. But I would say late to early next year, you'll see a 3 in front of fixed rates again. It's going to happen quickly. Inflation will nobody will talk about inflation next year. Okay. Unless there's some other new thing that comes into this world, which we don't know, none of us know about. So when things correct, when cash rates start coming down, the whole thing is going to change and change quickly. You saw those two graphs where the graphs just changed in 1 month. And then suddenly all the banks, and I said in my last talk, before the banks started reducing, in the last talk I said, watch the banks reduce their fixed rates, because I saw those graphs come down. Okay, those graphs, by the way, are published every day. You can Google it and watch it yourself every day. Okay, bit of lesson in money market, but just wait. Don't rush off and do that now, please.
All right. Next one, Zoom user.
Yes, it'll take longer. It'll take longer for variable rates to come down because the Reserve Bank is always slow. Okay, can 1%, can 1 to 4 quarter? They will never do a 0.5 drop. It'll be 0.25, 0.25, 0.25, 0.25. They only did a 0.5% drop because of the COVID. COVID is a once in 100-year event. So you'll see variable rate come down. I reckon you could see 2 this year and 2 sometime in the first half of next year. It's potentially, okay, potentially. If all my predictions come correct in terms of retail sales, GDP growth, and inflation numbers, those 3 are the most important things. So, but before that happens, so you remember fixed rates went down. Banks were giving you 1.89, even 1.99. They were fixed rates. Fixed rates fell quickly, variable rates slowly. So variable was still at the variable rate was still at 2.5, 2.6 when you could get a 1.99 fixed for 3 years. So the same thing is going to happen again, but it'll be a little bit more pronounced and quicker than the variable rates. That is what I'm predicting.
Awesome.
Okay.
All right. Another question from Amit. Which would you choose, a new house for $1 million in a 300 square meter block in Marsden Park, Box Hill, or Rouse Hill, or an old house in Quakers Hill or Toongabbie existing?
Listen, Amit, this is a very specific question. Why don't we take this offline? Please give us a call. We'll make a time and have a chat. Because just conscious of time and taking everybody else's time. Let's take this offline and have a chat about what your individual requirements are, and then we can give you some pointers. Thanks.
Amazing. Thanks, Sachin. Next question is Himani Singh. Slow GDP, higher unemployment, and slow retail growth signify recession. Under recession, does it make sense to invest in property or look at other investment sectors?
Good question, Himani. Listen, I strongly believe that we are not going to see a recession. We will see slower GDP. See, when people stop spending money, and I've been telling people quite a few months now to stop spending money if you want interest rate increases to stop. When you stop spending money, GDP does slow down. Unemployment will go up. But I'll tell you what will happen, right? You will see non-essential goods come down. So retail, non-essential goods will come down. Your JB Hi-Fis and your Harvey Normans and your Bunnings to some extent will see lower sales. Your essential good sales is not going to come down. Okay, we saw things like clothing and shoes and those things actually coming down. The prices coming down on those things in the inflation numbers that were published today. But 1 quarter of negative GDP is possible and likely, I'd say 3rd quarter this year. And that will probably be the most painful period for people. But then it'll be short-lived because the migration that's coming here, the numbers of people that are coming here are keeping a positive GDP. Because they have to come here and buy a washing machine and a fridge and a TV and all those things that they are spending on. So that is the biggest migration that's going to help our GDP sort of balance out from the people spending less and those people spending more. It's going to balance out somewhat. And that's the reason why I don't think it doesn't even look like a recession. Okay.
Awesome.
Yes, people will tighten their belts. Everybody's going to tighten their belts. Their mortgages have gone up. So we might not use the Uber all the time. We might not use Uber Eats all the time. We might not go out to our restaurants 5 days a week. Everybody's going to tighten their belt and save money because it is going to get harder. Listen, it's nothing new. I've had to do it before. I paid 17.5% for my first apartment here. Okay. So, but that's not going to cause a recession. We're going to avoid a recession. So I would say, and we haven't had a recession since the early 80s. Okay, it's been a long time, more than 35 years since we've seen a recession. So real estate is a class of asset. This is a good time because we've had a correction. I'm not saying we're going to have a year like 2021 shortly. Okay, 2021 with that type of increase of 25 to 30% in 1 year is probably not going to be seen maybe for another 20 years, maybe another 30 years. But you're going to see decent growth in property prices. 5%, 10%, 15% is still very, very, very decent. And because of the shortage of properties and the demand, you're going to see those increases.
All right. Part 2 of the question is, as you say, Schofield's population will double in 5 years. Will there not
100%, Himani. 100%, Himani. There is always a shortage of hospitals. There is already a shortage of retail centers, community centers, recreational areas. The councils are too slow in councils, and the New South Wales government are too slow in creating these. That's why you have got schools now in Schofield, Ponds, all those areas which don't look like schools, they look like dormitories. They are always behind the 8 ball, unfortunately, but it's not stopping them. People still want to move there. People still want to. So as houses get built, it will get populated. Okay, and the infrastructure will keep lagging, unfortunately. So I can't solve that. The government won't be, just like the rental crisis. There is a crisis on infrastructure, but there will be more money thrown at it. They will be expanding more hospitals and building more schools and community centers. So I don't have a magic wand for that, but you are absolutely right, Himani. That's all I can say.
And the good thing about that, Himani, I'll just step in, is that in the last 5 years, a lot has come up in Schofields as well. So there's been the new shopping centre, the new school on Geralong Drive. There's been a few things come up, but obviously, as Sachin mentioned, there's still a big lag effect. So, yeah. So, okay, the next question is from Akila. How will a 2-bedroom apartment grow in Castle Hill near the public school? Yeah.
Sorry, which question was that?
This was a direct one sent.
Another question from Manan. What's the short answer to Amit's question? Okay. Sorry, let me go back to Amit's question. Which one to choose? New house around 1,300,000 square meters in Marsden Park, Box Hill, Rouse Hill, or old house the same price on part in established areas like. Listen, if you buy an old house, you're going to knock down and build. That's the first thing I would say. So a new house is always better. I guess from a number of ways, because you are not going to have to replace your air conditioning or other things. So for a while, your appliances will last you longer. Your house won't depreciate as fast. Both have merits, okay? Both have merits so long as you buy at the right price. There's nothing wrong with Tungabi or Quackers Hill. They are established areas. Quackers Hill, for some reason, has been a poor cousin of surrounding suburbs. I don't know the reason why. There's been some poor quality houses and apartments built in that suburb. Perhaps the demographic is not the same as Ponds, but I don't want to give a subjective answer across the pitch, because there are some very good opportunities, I'm sure, in Tungabi and Quackers Hill. So that's my short answer. But do your homework. Try and find a bargain. Try, if you are gonna buy in Tungabi, try to find something bigger in terms of land size, with an old house that you can knock down and build something bigger. Maybe a duplex or something would be a better option if you're buying an old house, perhaps. Okay.
All right. I did get a few direct questions, but we can skip. We'll go through the ones which are on the main screen first. Next one was Akshay. Yes, I also want to know answer of Amit's question. Binu, yeah, that's cool. All right, good question by Amit. Awesome. So now, Manan, with more migration coming in, not everyone will be employed immediately. When unemployment rate is calculated, would that factor in the migration influx?
Yeah, listen, unemployment is going to go up. There's no question. Like I said before, I expect the unemployment to go up to somewhere about 4.5%. And I think that's still a very healthy unemployment figure. It'll create less wage pressure and therefore lower inflation as well. So your question is, would that factor in the migration flux? No. So listen, unemployment goes up to 4.5. We're going to still see people coming here. I don't think this Labour government is going to stop people coming here. I'll tell you why we need people coming here. Okay, the reason why we are firstly, there's a backlog because of the slowdown in migration during COVID. But the second and most important reason is we have an aging population here. So the aging population is a very pronounced issue, and that's why we have a huge budget on aged care. You've seen that already. Aged care is a big issue in this country, and we've got a huge budget for that. They need 100,000 more workers just in aged care to keep up with the growth in aging population. So the issue is 400,000 people roughly will be going on a pension every year for the next 10 years. So in 10 years' time, there'll be another 4 million people on the pension. Who pays the pension? The government pays the pension. Okay. So to pay for that pension, we need money. To get money, you need more people in this country paying taxes. They come here, they do a job, they pay taxes. You got to create employment. People need to work. They need to pay taxes. Then the government has more money to actually pay for the retiring and aging population. That's the simple equation. Okay. If we don't have this migration happening, our economy will collapse. Our government will not have sufficient funding. You see the strikes that are happening in France at the moment. So the strikes are happening because they've raised the retirement age from 62 to 64. No big deal, you would say, in Australia, because we've raised it from 65 to 67. Nobody said boo. Okay, we did not march in the streets. We said, great, we'll earn money for 2 more years. But they are marching. The French government has very clearly said, if we don't do this, we can't afford to pay a pension. The government will go bankrupt. We have to do this. So listen, it's a big issue. Migration is not going to stop because unemployment goes up. Even if it goes to 5%, it is not going to stop. There's people coming here, believe you me. Okay.
Awesome. Thanks, Sachin. We'll quickly just revert back. There's a couple of direct questions that I received. So one from Akila, who asked, I'm buying a 2-bedroom apartment in Castle Hill near a public school. How do you think that will perform? Again, Sachin, I believe that would come down to buying at the right price, obviously right location, right builder.
Castle Hill is, Castle Hill. So Castle Hill is like Norwest, very, very expensive now. Bella Vista, Norwest, and Castle Hill around similar prices. You're looking at the cheapest 2-bedroom you'll get will be upwards of the 850. 850, 900 will be the cheapest probably for a brand new apartment. And then it goes up from there. So, you know, if you're interested to stay in that suburb and wanna look at what we've got in stock, more than happy to talk to you outside of this. But if you want to see more growth in prices, we are actually also seeing a new dynamic in the market. People who are downsizers. It started happening more after COVID. So these downsizers are people who are selling the $3 million houses in Castle Hill, and they want to move into a large 2-bedroom apartment with a big size balcony. And they're happy to pay $1 million. So there is a big market for that type of apartment, 1.2, 1.3, 1.5 even they're happy to pay. So that is sort of starting to something I haven't seen before. Okay. So you're now competing against those type of people who are happy to sell their house for 3 million and downsize and move into something like that. So, but happy to take this offline.
Thanks, Sachin. One more direct question, actually 2 more quickly. So Prashad sent me a question asking for information on Rouse Hill. Prashad, I've got your email. It's Chris here from Nivas. I will reply and send you information on that. Next one is, and thank you for your question, from Bags. So Bags has written an apartment in Schofield or Rouse Hill. Which is the better option?
There is no development like what we are showing you today in Schofield. None whatsoever. Rouse Hill will be a more premium suburb than Schofield any day of the week. So there will be a price differential, no question in my mind, between Rouse Hill and Schofield. And for those premium type apartment complexes, there will be more sought after and we'll see more growth. So within the same, this is two very similar suburbs, not far from each other. Okay. One could go up in value by 100,000 and the other might only go up by 25,000. So it's about buying somewhere at the right price. And the reason why we picked it, I can show you other Rouse Hill ones, which are much poorer quality. I can show you some made by Bartla, which are even worse quality. And we don't sell them because we don't believe we believe in good quality, okay, for our buyers. So listen, it's like in Australia, they say horses for courses. If you really want to stay in Schofield for some particular reason, then go for it. But if you had a choice to live in Rouse Hill and buy in a prestige development, then I would definitely go for this, even though it might be $20,000-$30,000 more than a Schofield. But having said that, I think the Schofield prices are very similar to what we are selling here.
That's exactly right. Yes.
So in that case, it's a no-brainer. No-brainer where you should buy.
In fact, the prices for our Rouse Hill project are pretty similar to second-hand prices for apartments in Schofield. That's how well priced they are at the moment after the rebates. So, okay. Next question is from Manan. My thought process was that when more migrants come in, unemployment will rise up to 5% as they won't have immediate employment. Yeah. Okay. That's cool. So Ashish, are there any new developments like Ilara coming up in Marsden Park? Any new subdivisions?
Not that I know of. Not that I know of, but there is there's one side of Marsden Park that hasn't actually been developed yet, and that is as you are going from Blacktown to Marsden Park on Richmond Road, it is the right side. So Ilara is on the left side. Before Ilara on the right side, that area has not been zoned yet. And I think that will be the next big thing in Marsden Park, is because if you go a little bit further than Ilara, then you go starting to hit some of the flood areas that once in 100-year floods. And on the right side, just sort of not far from where Schofield Road actually finishes, that area that is going to be developed next. And so there has been a lot of purchases done there. It hasn't been zoned yet. There's been a lot of purchases done there by land developers. And you will see the next big thing over there. Okay, it's slightly before Ilara on the right side. So that area will be closer, of course, to Schofield. It's between that sort of Ilara and Schofield. That area is the one I'm talking about. So you will see a lot of houses coming up there, and there may be maybe a slight premium, perhaps. It'll also be interesting to see where they put the metro at Marsden Park. So it could be more around that area.
Awesome. Thanks, Sachin. Okay. Last two questions, I believe, if I'm not wrong. So Jay Kumar Patel, first question, his question is, hi Sachin, how's the market situation in Newcastle?
Jay, thanks for the question. Listen, Newcastle is a different, very different place. The thing I'd say about Newcastle is it is also an area of growth. There is I believe there's going to be an international airport there at some stage. The Hunter and Newcastle is a growth area that the New South Wales government has put in its future growth areas. So definitely there is absolutely nothing wrong with investing in Newcastle. It is going to continue to grow. Mind you, just caution again, the prices have already gone up in Newcastle. In certain suburbs, there might still be some value, but prices are already, apartments are already at a premium there. It's a good growth area. There's no question. Newcastle is a good growth area. It's got your infrastructure, universities, hospitals, and so on. And there's more infrastructure to come there, like the airport and so on, and connectivity. So nothing wrong with Newcastle. But if you were to go venture out into more into sort of the interior areas, regional areas, then I would caution against it. But happy to discuss further, Jay.
Awesome. Thanks, Sachin. Last two questions again. Okay, so we had one from Akshay. Which suburb will you suggest for a principal place of resident around 1.5 mil?
Rouse Hill.
True.
Rouse Hill, Akshay, and please talk to us because we have got some amazing stock in Rouse Hill at that price, even below that price. Okay, amazing property, amazing pricing for good sized double-story homes. So please speak to us outside of this.
Thanks, Sachin. Another one is from Bala. So Bala has said, how about house growth if more apartments are in the same suburb?
A different market, it's a different class of asset, different market. There's some people who will only want houses, only want to live in houses. They want a bit of land. They don't want to live in apartments. Okay, those that can afford it will go and buy a house and land package. So people transition from apartments into houses. Some people transition from apartments into bigger apartments, into townhouses, and then houses. Okay, so it all depends on your borrowing power, your deposits. It could be your second home. So the big thing at the moment is that gap that I talk about, and that's why we are pushing apartments at the moment. We can have a separate session on house and land, no issues at all, and we can show you some amazing stock in that space as well. Okay.
Thanks, Sachin. All right, now Mandakini is asking, hello Sachin, great insight into the property market, thank you. Any suggestions on South Australia? I could probably elaborate a little bit on that if feel free.
You sell a lot there, so why not?
Yeah, no. So look, Adelaide market at the moment, as you know, in the last sort of 18 to 20 months, property prices have gone crazy there, right? So you're not going to get those big spike in prices in Adelaide, but what you will get is some good organic growth, right? So what's happening there at the moment is the rental market is insane, much like Queensland, New South Wales, and pretty much everywhere now. So, but their vacancy rates are in fact amongst the lowest in Australia. And look, off the back of that, simple supply and demand, you've got the new, the new naval base being, well, not the new naval base, a new submarine base being built there. So another 20,000 jobs. So you've got a lot of good stories for Adelaide. You will get good organic growth, but just don't expect any spikes in a nutshell. Yeah. So, but still,
the organic growth is quite healthy.
100%.
So the land values are still cheap, and the population is growing there. There's a lot of infrastructure going in. So, we can source good properties there for you.
100%. Still a good place to invest, no doubt. I'd go there over Perth. All right. So if we're having a look at the next question, what's your view on Kellyville versus Rouse Hill up to 1.5 mil?
Okay, Chandan, good luck finding a house in Kellyville for 1.5. But true. Yes, there still are some available. But Kellyville, and that's a good question, Chandan, because if you can afford Kellyville, I'd say Kellyville. Okay, Kellyville is closer to Bella Vista, and we all know that Kellyville and Bella Vista has not gone down in price in the last 2.5 years. Last 3 years, it has not gone down in price. It's only gone up. I live in Kellyville. Okay. I live in Kellyville, and I live 2 streets back from Bella Vista. So I have been lucky to be enjoying price growth on my home, because Bella Vista now, the average house price in Bella Vista is now 4 million. The average land price in Bella Vista is now 2.5 million. Okay. So the thing is that Kellyville is so close that if people can't afford there, they come to our street, and then the street after, and then the street after. So Rouse Hill it's all down to, there'll be a big difference in the size of the property and the size of the land, Kellyville versus Rouse Hill. So if you can find something that suits you in Kellyville, then please go for Kellyville. We have, as I said, stock in Rouse Hill that we can talk to you about. So more than happy to discuss that with you. We also have stock in Kellyville, but I dare say the pricing actually starts at about 1.75.
Yeah.
The new stock that we have in Calibre.
Yeah. No, awesome. I think that was the end of the questions. Thank you, Chandvi. Thank you, everyone who's.
Chandvi's got one. What about
there you go.
Nelson? Nelson. Okay. Listen, we're talking about Box Hill here again. Box Hill is going to see growth. They're going to run out of land soon, and people will go even further, Oakville and so on. So if you can get a bargain, if you're looking for a block of land to build a house, or you're looking for an existing house, this is not a bad time to be going to Box Hill. I believe, sorry, Gables, I know. Nelson, is that in Box Hill, Chadvi? I'm not sure about Nelson. I just haven't heard of Nelson, but I presume next to Box Hill. Okay, got it. So if you can get a bargain right now compared to prices 12 months ago, then I would say this is a good time to get in. Don't wait for another 6 months, because the market has already bottomed. Okay, from here it's only going to be up. Once the fixed rates fall, and then that's the impetus you'll need for the prices to start going up again. Okay. Listen, thanks everyone. Sorry we've gone a lot over time, but hopefully it has been useful for all of you. And we are always available. There's a number of us that asked you to come today. Please contact Krish, myself, Raj, Sanjay, Amrita, Rameth, any of our team members. Our number is also on our website, nivasrealestate.com. So until next time, please keep in touch, and we hope to help you with your next purchase. Thank you so much.
Guys, just before we go, I'll just leave our email address is info@nivasrealestate.com.au, right? If we've missed your question, if you have any questions further, if you want to sit down with us and just have a chat, just send us an email, info@nivasrealestate.com.au. Thank you.
Yep, I'll leave that there for another 10 seconds.
Awesome.
Thank you, everyone.
Thanks, everyone. Have a great evening. Cheers.